would like to ask Ronald Freeman about the modernization and innovative project which is possibly going to kick off not very far from here, just a few hundred kilometers to the east. And if I could ask Ronald about his views and insights into the innovation discussion in Moscow, I'd very much appreciate it.
Thank you, Mr. Moderator. Innovation, this term is site-specific, time-specific. What is innovative in one place at one time is not necessarily so elsewhere. But Russia, where I have spent more than 20 years working, is driving growth in employment, growth in customer satisfaction, and growth in the economy through innovation. I approach Russia as Russia now is tilted towards as possible. The need for innovation in Russia is clear. The Russians I work with are capitalists in their orientation, very keen to do the kind of due diligence, the kind of investigation that leads to growth and successful investment. I sit on 3 supervisory boards in Russia. One is an oil and gas exploration company operating in the Saratov region called Volga-Gas. One is a major steel company located 350 kilometers north of Moscow in Cherpovets in the Vologda region called Severstal. And one is an innovative, truly innovative investment bank, an equity research company called Troika Dialogue. The oil and gas and steel sectors have long been drivers of the Russian economy. Drivers to some degree in the past. Troika, because of its broad range of coverage of Russian companies across a range of industries, gives us a very good view of the future, and many of my remarks derive from Troika Dialogue's own equity research. Indeed, if you are interested, I would urge you to consult the Troika Dialogue website, which is in English, which is helpful. There is a very clear difference between the Russian economy and the Polish economy. Russian private sector companies over the last 10 years have seen their earnings grow, on average, much faster than Polish private sector companies. On the other hand, the steadiness of Polish private sector earnings growth is better than Russian growth. The Russian private sector is very volatile. In other words, when it goes up fast. When it goes down fast. And the drivers, upwards and downwards, are government actions, actual government actions, perceived government actions, rumored government actions, and feared government actions. This sensitivity to what the government might do is the greatest single source of tension and also of opportunity for investment return as Russia's private sector tries to innovate out of the old days. There's a very clear trend in Russia domestically, and this is in the consumer trend. As Russia's old generation is replaced by a younger generation, in which old men are in their early 40s, and the employees of the companies on whose board I sit are largely in their 20s and 30s, we see a population of young Russians, mainly educated abroad, speaking several languages, and with a broad view of what's going on in the world, trying hard to raise Russia's standards to world standards. Not as an exporter. I don't think any of us have in our homes Russian manufactured products, unless it's a Matryoshka doll you bought at the airport. They are not yet exporters of high value-added consumer products. But their domestic economy, with 150 million people, is growing, and is growing rapidly in the services industry to give Russian consumers what they need. If you look at the top picks for growth, they are almost overwhelmingly retail, telecommunication services, broadband in particular, banking services, automotive, and restaurants. These are the fastest growing industries in the private sector in Russia. And there are companies listed on the exchanges, both in Russia and abroad, mainly in London, where you can track the progress of these economies. An example of innovation, any of you who have been to Russia in the old days went to a gastronome where the shelves were mainly empty, and you were greeted, if that's the proper term, by a large frowning lady, and her question to you is, "Что?" You know, what do you want? Well, it was a good question because there was not much to be had. And when McDonald's came to Russia in 1989, the chap who was running it told me the first thing they had to teach the young Russian kids was how to smile. That's a long time in the past. Russian stores now, Russian restaurants, greet the customers in as friendly and as straightforward a way as they do here in Poland. They are trained to deliver a clear, clean quantity service. And this is true in a broad range of industries. Let me list a few. Banks, those of you who ever went to a Sberbank in the old days, stood in a long queue, filled out 3 pieces of paper to get back your own money, and usually it took an hour. Financial services, retail loan penetration is less than 10% of GDP in Russia. Russians are very reluctant borrowers, and they're also very reluctant, or have been historically, to entrust their money to banks because their money has been stolen through inflation and government expropriation in the past. 70% is the comparable number in Western Europe, and so the banks and bank deposits are growing rapidly, and loan growth is growing as people learn to trust modern, well-managed banks. Increasing banking by the internet, still at a tiny level in Russia. This is growing at double-digit rates as people learn to trust the internet to move their money around, as we do here. Penetration of organized retail is only about 40% of all retail, compared with over 90% in Europe. In other words, chain stores with familiar, established formulas. This is now spreading over a broad range of Russia's territory, all the way to the east. Logistics, containerization. Containerization has reduced the cost of freight and therefore the cost of many goods in all developed countries. Containerization in Russia is still 1/quarter of what it is here in Poland. The lack of logistic capacity, container handling ports, is the reason for the slow growth. This is rapidly changing. And this, too, is bringing down the cost of goods and making a much broader appeal to the economy and to consumers. Automotive. Russia has 44 cars per 1,000 people. It's something like 97 in Germany. Now, any of you who's been stuck in a traffic jam in Moscow or St. Petersburg might say 44 is plenty. But if you go outside the major cities, you see a very small number of private cars. There's about 15% annual growth expected over the next 5 years in private automobile purchases in Russia. Automobile companies from around the world are rushing to the country. They see it as one of the most attractive markets. As attractive in terms of rate of growth, although with a much smaller population, even as China. Airlines. Russians travel much less than Westerners. This is a function, A, of their lower available income. That's changing rapidly. It's also a function of the kind of care they got. If you flew on Aeroflot domestic in the old days, the tray table tilted at an angle into your lap. The seat belt didn't work. If you tried to put the seat back, it fell back horizontally into the passenger's lap behind you. And the reading light was also broken. Aeroflot today is not like that. And a variety of competing airlines have raised the quality of air service in Russia. It's simple, straightforward, and it's, again, creating double-digit growth. Broadband penetration in Russia is about 6%. It's much higher in the capital. It's 25% in Moscow. But this, too, is leading to 20% growth rates. Pharmaceutical spends are about 25% of what they are here in Poland. And media, finally media. Media is about 1/2% of GDP in Russia. This is advertising on television, advertising on billboards, advertising over the internet. It is a hugely growing sector. And here, perverse government policy has increased the rate of growth. Media companies know that Russian government policy limits the amount of advertising time on Russian television. There are more advertisers than there are minutes available. They also limit the number of channels. Part of this is due to frequency allocation, and part of it is due to political considerations. That makes advertising rates grow very quickly, and media companies in Russia offer very attractive returns. The generational change can be epitomized, and I'll close here with a short anecdote. When McDonald's first came to Russia, which was really the first exposure any Russians had to Western-style retailing, the daughter of a friend of mine who's a professor and an economist in Marxist economics, applied for a job at the first McDonald's, one on Pushkin Square. It's still there. And she was accepted. She came home, she told her dad, very excited. Of the hundreds of candidates, she was one of those who was accepted. He said, darling, wait a second. I've had access to McDonald's financials, and they are exploiting the workers. There is a high unearned surplus, which is not given to the workers. In other words, standard Marxist economics terminology. She said, Dad, I know, but I like it. He said to me afterwards, said, Ron, I have read everything Marx wrote. I've read everything written about Marx, and in none of this scholarship did anyone ever surmise that the worker would know he's being exploited and say, Dad, I like it. So things have changed. Things have changed radically. You would find the Russian retail market today very similar to what you have here today in Poland. For those of you who have not been to Russia lately, have a look. The problems are considerable, mainly because the generations are changing and expectations are rising much faster than the government, for a whole range of reasons I don't have to tell Poles about, is lagging well behind expectations. This is what's driving the market forward. This innovation takes place not just in the shops, not just in the restaurants, but in the minds of the people, and that's the most important innovation of all. Thank you very much.